Hi, it's Richard. Today's topic is a review of the features and use of our TrackerPL indicator. Before we jump in, please remember to like this video, subscribe to our channel, and drop us a comment below to share your thoughts. If you are new to our channel, we have 3 other videos that provide relevant background on our indicators. The first covers indicator installation and uninstallation. The second introduces the concept of smart indicators and describes how they are intended to provide added value to your trading. The third video presents how we identify and track trading opportunities through the chart setup and technical indicators we use. Our chart setup is depicted here. It shows how our smart indicators are tracking key references on 7 charts. TrackerPL is loaded on our mid-time frame chart, which we show here as a 15-minute or comparable chart and divided into left and right sides. For trading ES using an ET8 session template, we use a 10,000 volume chart as comparable to a 15-minute chart. TrackerPL was created for 2 purposes. First, it adds some basic functionality to charts by adding a price line, adding horizontal lines at the current session high and low, and automatically adding price labels to all rays and horizontal lines drawn on the chart. In the user interface, you can set the color, dash style, line width, and opacity separately for each of the current price, session high, and session low lines. You can also set the font size for the price labels added to the horizontal lines and rays. The second and more significant purpose for which TrackerPL was created was to assist with trading when the chart width of interest is wider than one screen width. Many trading methods are based on price reacting to previous price structure, so not being able to see your frame of reference puts you at a disadvantage. To keep things simple for illustrative purposes here, let's focus just on supply and demand. In general, traders anticipate a potential trade opportunity the first time price returns to test a fresh supply or demand zone. Therefore, each zone needs to be tracked forward in time until it is tested or broken, which may take days or even years to occur. What this means is that current price will be on the far right side of your chart, but your fresh supply and demand zones are often off-screen many screen widths to the left. Now you have a problem. You need a way to bring together current price in the nearest areas where you have identified potential trade opportunities. You have several potential solutions. It is worthwhile to consider the pros and cons of each. First, you can use a higher time frame chart to fit everything onto one screen. Unfortunately, you lose the detail of the lower time frame. As well, you have created a new issue that you need to resolve in your trading plan. If you bumped up from a 15-minute to a 30, 60, or 240-minute chart, then you are no longer consistently trading 15-minute zones. So now require rules for how much risk you are willing to take per trade, given the zones are likely larger as the time frame increases. You also need to have rules to reconcile when you trade a zone on one time frame versus all the others. In my opinion, this approach of deliberate inconsistency is unlikely to serve you well if your goal is being consistently profitable. As a second option, you can stay on your original time frame, which we again assume is 15 minutes, and extend all your fresh supply and demand zones forward in time as rectangles. This allows you to just look at current price alongside whatever rectangles are in view. Done manually, this is a lot of work to create and maintain, and what if the computer glitches and decides to erase all your zones? Alternatively, you can use an indicator to calculate and track these zones, but now you have to find one that draws all the zones you would draw and draws them the same way you would. In my experience over the last decade, I have not been fortunate enough to find such an indicator. TrackerPL offers you a third option. Split the screen on one monitor to have two charts side by side of the same time frame. I do this for my mid-time frame 10,000 volume chart. The right chart shows current price. Scroll the left chart to the left to your nearest fresh supply and demand zones around current price. Load TrackerPL on both charts. You can even scale and center the charts so that the price line and session high and low lines appear continuous lines across both charts. Now on your left chart, you have retained all the lower time frame detail you desired, and you can see current price and the session high-low range. Effectively, you have removed the middle of your chart data, reducing your focus to just what you consider important. A secondary benefit of the approach using TrackerPL is that the session high-low lines can serve as price footprints. You are able to instantly see how far price pushed into your zone on the first test, so that now you can plan ahead to see if you might take a second test of that level. Or if you are like me and take a break during the trading session, it is helpful when you come back to your screens to be able to instantly see how far price has pushed. Here are two examples using images from our website. The first shows a one-tick failed breakout below the Globex low. The market loves to trap traders, so having a way to watch for these trade opportunities is certainly helpful. For this trade, TrackerPL helped the trader see that the break of the Globex low was only by one tick, thus setting up the potential failed breakout trade opportunity. The second example is one where we are looking at the fresh supply and demand zones on the far left side of the chart. The right side chart is not shown to highlight that it is not required to see where current price is located. With TrackerPL, you can directly observe as price tests a fresh demand zone and then reverses. The session low indicates to me that price fully penetrated the demand zone with a one-tick failed breakout before reversing. So for my rules, that zone is fully tested, and I would not look to lean against that zone again a second time. I hope you have found this video helpful. Please remember to like this video, subscribe to our channel, and drop us a comment below to share your thoughts. Contact us by email if you are interested in taking a free trial of any of our indicators.